Stocks took off on the news of that jobs report. There was some added good news on the economy as consumer spending and income both rose. But the market shrugged off an unexpected drop in consumer sentiment. So all in, the Dow rose 167 points to close at an all-time high of 15,761. The Nasdaq jumped nearly 62 and the S&P 500 added about 23.5 points. But interest rates spiked with the 10-year Treasury bond hitting 2.75%. But one question did arise. If that jobs number was so strong, suggesting the underlying economy is firming up and the markets are concerned with the Fed starting to ease up on its bond buying purchases, why did stocks go higher? Well, we asked Bob Pisani.
The surprisingly strong October jobs report pushed interest rates up again today. Yields on 10-year treasuries are now at 6-week highs, and that's putting pressure on interest rate sensitive groups like utilities, home builders, telecom, and real estate investment trusts, all of which are down for the week. But the idea that just because interest rates go up, the stock market is supposed to go down, didn't hold water today. Yesterday was the worst day for stocks in 2 months. But aside from interest rate sensitive names, most of the market was up today, particularly beaten up groups like biotech stocks, oil and gas stocks, airlines, and momentum names like Zillow and Netflix. Now, part of today's strength was also due to financials. Higher rates are generally good for banks because it increases the chances that the banks can charge higher rates for loans. Finally, Twitter had a slam-bang debut on the New York Stock Exchange yesterday, but it drifted lower on its second day of trading, ending down 7%. For the week, the Dow Jones Industrial Average was up 1% and closed at an historic high. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.